Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Great to be with you again.
Hilliard, with high gasoline prices in the U.S. catching headlines there, and of course we have high prices here in Canada as well, it seems the U.S. is begging everybody in the world to up their production to bring those prices down. But the one country that hasn't been asked to do more is Canada. Why is that?
Well, it's just amazing to me that when they talk about the sanctions against Russia and the effect it will have on the world oil market, which is pretty tiny actually when you consider 700,000 barrels. Now that is what the U.S. gets from now it is bigger. There's 5 million barrels that go from Russia into the world market, so that's about 5% of the 100 million barrels. But more directly, there's almost 4 million barrels that go from Canada to the U.S. And it never gets mentioned when the White House is talking about it, or Congress or anybody's talking about it. They don't seem to recognize it. And at first I thought, well, maybe they don't know. They import about, to give you a rough idea, they import about 6 million barrels, and 4 of them come from 4 million, or 66% come from Canada. So all of the other countries, Saudi Arabia, Russia, and all the others combined, add up to only 2 million barrels. So there really no other country is even close to 1 million barrels. So, and then the U.S. has actually got quite a bit of production of their own. So actually, they're importing from Canada, but they're also exporting oil as well. They're exporting 1 or 2 million barrels as well. So, but they don't mention this because they can easily come to Canada and ask for more oil. So finally, I think I figured out why they don't mention Canada, and that's because the administration canceled the permit for Keystone expansion. So Keystone 4 was going to be an expansion of about 800,000 barrels. And it's very embarrassing to the administration because one of the first things they did when they got in a year and a half ago or whatever it was, they canceled the permit, which the previous president had approved for the expansion of the Keystone. So they basically shut down 800,000 new barrels that would have been coming from Canada into the U.S. And I think that's why they can't mention it, because it would draw attention to that mistake. If it was a mistake, it looks like it was a mistake. So, and if that doesn't get approved, it actually would be kind of hard for Canada to increase the number of barrels. You could put them on the rail cars now, but there just isn't capacity in the pipelines to do it. But the other thing that's quite interesting, not related to Canada but related to the shortage of oil in the U.S., is the fact that the big surge in production has been coming out of Texas in the Permian Basin, West Texas, and it's shale oil. And again, the administration had made noises during the campaign about banning shale oil, but they didn't ban shale oil. But the shale oil producers want protection, so they've got 5 million barrels of production today, and a couple of days ago, earlier this week, they mentioned, one of the leading people mentioned that they could increase to 8 million barrels, but they want assurances from it was almost like blackmail. They want assurances from the current administration that they'll be treated properly, which basically means they will be allowed to expand their production without any difficulties, or else they're not going to do it. So they've basically been sitting on their hands with idle drill rigs, which could pump a whole bunch of new oil, get the price of gasoline down, and they're trying to put a squeeze on President Biden and the administration. So it's a mess. It really is, and it'll be interesting to see how it all sorts out.
Well, Eastern Canada, one of the maritime provinces, is against fracking for oil. I think Quebec might be. They're certainly not pro-fossil fuel in Quebec. And yet I'm sure they complain about high gasoline prices. Well, you could be part of the solution.
Well, yeah, the Quebec doesn't allow it. New York State doesn't allow it. Right across the border in Pennsylvania, they've got a lot of oil production from oil, actually mostly natural gas, but production from shale. And New York is banned it. They don't allow it. So there's lots of oil. This is the crazy thing about all this. There's lots and lots of oil. And of course, oil gradually, the 100 million by the way, it went down to about 82 million during the recession in 2020 due to COVID. But it's back up to 100 million now, which is where it was. But it's expected to decline if the shift to the renewable energy continues at the pace it's been going. It'll be declining. So as people switch to electric cars and so on. So the future, the short-term future is very bright for oil. The longer-term future, about 15, 20 years, is somewhat clouded. But no, there's lots of oil. It's just a lot of stuff going on right now. And even government aside, some oil companies have basically stopped reinvesting. Like I think Shell and British Petroleum both have started to invest more into renewable energy and less into new oil. So because they don't want to spend a bunch of money to get a bunch of new oil production coming and then find out there's a glut of oil. So it's a difficult time. These transitions are extremely difficult.
Yes, I guess the last time we had a major transition like this was when we went from horses to cars. And I think that took 40, 60 years to work out. The German army in the Second World War, although we talk about blitzkrieg and armored advances, their artillery and their supplies were towed by horse. They used millions of horses in the Second World War. And the car had been around for a long time by then.
When Germany moved into Poland right at the beginning, the Polish cavalry met them mounted on horses. So the resistance didn't last very long. When they saw the German tanks, I guess it was over pretty quickly. But they were still on horses. But I was shocked to find out that the Rockefeller Fortune, Standard Oil Trust, they had been going along quite aggressively since the 1880s, 1890s, and of course the gasoline car had not been it had been invented, but it wasn't in use yet. And so the main product actually was kerosene for lighting and cooking and all that. And people thought that gasoline was not of any use because it was too volatile, it was too explosive, too dangerous to work with. And until the car came along, there wasn't really any use for gasoline. So they basically just saw it as a nuisance, a byproduct that was difficult to deal with when they fracked the barrel of oil to get the kerosene that they needed. And so things can change pretty fast. And when the car came along in about 1905, people didn't think that people would want to sit on top of an explosion of gasoline, as it was considered very dangerous. Right? So here we are, and now people are worried about electric cars because they're worried that the materials, that they're going to use so many materials. I keep hearing this every day now, that the world won't be able to supply enough nickel or manganese or cobalt or all these different materials that go into the battery for the car. So there's a lot of difficulty in acceptance of these transitions, but sometimes they just happen anyway because the momentum is just too strong.
Yes, back in the late 1800s, they did a study in New York, and they said with their city growing by 50,000 people a year, and them all bringing their horses to town, the city by, I think, 1910 would be buried under 100 feet of horse dung.
Yes.
They just couldn't clean it up fast enough.
They got rid of the horse dung, and they got in the gasoline, which was, I guess, cleaner in a sense.
Yeah, it traded the ground pollution for air pollution. We'll have more with Hilliard MacBeth right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, with the price of oil so high, you would expect the Canadian dollar to be doing a whole lot better than around 78 cents. What's your theory on why the Canuck buck seems to be stuck around that range?
Yeah, the U.S. dollar generally appreciates when there's a crisis, and obviously the Russian-Ukraine crisis is a pretty big crisis. U.S. dollar goes up, and of course we always tend to think of the Canadian dollar in terms of the percentage of the U.S. dollar. It's right now at 78%. So our dollar probably has moved up against other currencies, but because the U.S. dollar is a safe haven during times of trouble. It's interesting. The U.S. dollar is a safe haven during times of trouble, even when the U.S. creates the trouble. It seems unfair, but that's the way it is. But it's true. Now that the possibilities are, there's at least two possibilities I can think of. One is the reason for the Canadian dollar not zooming higher when the price of oil has gone up so much is people think that the price of oil increase is quite temporary and is not going to last. So they wouldn't necessarily buy the Canadian dollar and push it up because of that. The other thing, and this, I don't know if this is possible, but it is possible that people are outside of a few people in Canada are starting to become aware of the dangerous situation with the housing bubble in Canada and the debt levels in Canada. There's been many stories written in Financial Times, Wall Street Journal, and different areas that Canada's got a dangerous housing market. Now, I don't know if that's possible, that could be the reason, because I just still don't think that people generally are very worried. People think of Canada as a safe haven, modest, conservative, financially conservative, not politically conservative, but financially conservative country that is in great shape, and is very boring, and nothing ever happens. So it's hard to believe that they start to get worried about our finances, but we still have a AAA credit rating at most rating agencies, which is better than the U.S., who lost their AAA credit rating in 2011. The only other major country is Germany that still has a AAA credit rating. So Canada's got a reputation that probably we no longer deserve, given our huge boom in mortgage debt and housing prices, but the crisis has not hit yet. So it's hard to say. I think probably the more likely explanation is that people are not investing in the loonie as a petrol currency because they don't expect the oil price to stay this high for very long. They probably think that the crisis in Ukraine is going to end quickly, and we don't know if that'll happen, but that may be what they're thinking.
Another suggestion to us from friend of the show, Danielle Park, is that Canada's high mortgage debt is chasing away investors, considering that home prices, depending where you live, have gone up anywhere from 15 to perhaps 25% over the past year.
Yeah, I saw the Terranet house price index came out yesterday, I think, and I was just flipping through it quickly, and there were a couple of cities like Halifax and maybe Hamilton that were over 30% gain in 1 year. It's just ridiculous. And of course, the hotter the housing bubble burns, the bigger the bust will be when the bubble bursts. So this seems like the last stage of the bubble, which has turned out to be a much more massive bubble than I started to write about 7 years ago. It was already a bubble when I wrote about it 7 years ago, and now it's just gotten to be that much bigger. And it's just hard to visualize how big it is in relation to the relatively puny bubble that the U.S. had in 2007 that caused that tremendous crash and almost brought down the world financial markets. 40% drop in house prices in the U.S. Most major banks and Wall Street firms would have gone broke if the government hadn't arrested them. At least 2 car dealers went bankrupt. And I could go on and on. There's a huge number of ramifications to that, and that was basically not all caused by the housing crash and the mortgage collapse, but a lot of it was. And now, of course, the difference with the Canadian housing bubble is there aren't a lot of international financial firms like Goldman Sachs and Morgan Stanley and AIG they're speculating on Canadian mortgage debt because the instruments don't exist that you can trade them the way you could with the U.S. debt. They had Fannie Mae and Freddie Mac, and they had derivatives, and they had credit default swaps and all that stuff. We just don't have that on our. The impact of a housing crash in Canada would be more limited to Canada than the crash in the U.S. was. But the house price gains are much, much larger than the U.S. gains were. And the expansion of mortgage debt is much, much greater in Canada as a percentage of GDP or as a percentage of household income or percentage of any measure you want to take. Much, much bigger than what happened in the U.S. Before 2007 when it all started to come apart. So, I guess we'll just have to see how it all goes. Now, there is a belief in the government, in the CMHC, in the Department of Finance, in the regulator OSFI in Canada, that Canadians will continue to pay their mortgages in spite of any kind of a drop. As house prices dropped 30-40%. I think the stress test the Bank of Canada examined was 38% drop in house prices. And they assumed that there would be no mortgage losses because Canadians would continue to pay their mortgages, even though the most recent buyers would be paying a mortgage that was way underwater in terms of the value of the house. But there is some reason, justification for that belief, because I saw a study recently that indicated that of the people in the U.S. that were underwater in their housing, at one point it was like 30-35% of all people with mortgages. Only 1 or 2% of them actually voluntarily walked away from in the U.S. they have the right to walk away in some states, about half the states, without any repercussions. They can't be chased for the balance. And yet most of them kept paying. And financially that doesn't make any sense. They feel that it was a shame thing or pride, or, they felt that they would hurt their credit rating forever, or just a lack of financial awareness that they kept paying their mortgages. And the housing market is recovering in the U.S., but probably a lot of them are still, many, many years, 15 years later, still probably just barely breaking even on that mortgage now. So there is some evidence that people would continue to pay their mortgages even though there was a housing crash. But the problem with that would be a huge burden on the economy, because people shoring up their mortgages would not have money to spend on other things like stuff at Canadian Tire, stuff at all the different other consumer spending items, cars, and that an awful lot of Canadian businesses rely on people going into debt to buy those things as well. So if they focused on their mortgages, it would be cause a big slump in consumer spending in Canada.
Hilliard, anything else that caught your eye?
Well, one thing I wanted to mention was the fact that, on another show we could talk about the repercussions of the war in Ukraine, and hopefully it'll be over soon without too many more deaths. But one thing I was doing some research and found out that since the war started, it was February 24th, so about 3 weeks ago as we talk now, the U.S. stock market, there's a index that has the 50 largest companies in the U.S. In Europe. Sorry, I meant to say Europe. The European stock market is only down about 6% in those 3 weeks. It's quite shocking when you think of how close that conflict is to Europe and how involved Europe could get if things spread into NATO countries. So the stock market has held up surprisingly well so far, so we'll be watching it closely. Maybe we can talk about it next time.
Well, Hilliard, since how we have you on the line, we might as well talk about it. Commodities,
sure.
Russia's a major supplier, and of course, Europe relies on Russian gas to keep warm and on oil to run their cars. There's going to be some kind of an impact eventually on the economies around the world from this, not just in Russia.
Yeah, I mean, so one of the biggest, the European market is different from the North American market because the mix of stocks is different. So there's a lot of financial entities. If you include Great Britain, the United Kingdom, there's big oil companies like Shell and BP, and so they have more of a value stock oriented market. And but you're absolutely right. I mean, the the impact of natural gas prices going that high in Europe are going to have a big impact on European economy. It's just that the European economy is not as dependent on consumer spending as the U.S. economy is and the Canadian economy. So maybe that's why the stock market hasn't sold off as much as you would expect. But it still is pretty shocking. And I think it might be like was mentioned a minute ago about the oil price. It might be because people are assuming that the conflict is not going to last very long. But that might be a mistaken assumption. It seems like President Putin in Russia is pretty dug in with his belief that he has to do something to protect himself from NATO expansion, and he needs Ukraine to allow him to do that. So it's hard to see him backing down, and of course Ukraine cannot back down, I don't think. And so the big question is, does NATO get involved? And of course they're not obligated to, because Ukraine's not part of NATO. But there's a lot of countries around Ukraine, like Romania and Poland and others, Germany, that are part of NATO. So it's not far away. And so I'm pretty surprised that so far the ramifications rippling through other sectors have been pretty minor. And I think it would be a good guess that if this thing lasts a few weeks longer, the markets may change their view on that, start to make longer-term adjustments to reflect a situation that will be more difficult for Europe. And of course, now the European stock market was not expensive when this, unlike the U.S. stock market, the European stock market was relatively good value in terms of pricing. So they didn't have as far to fall, but still, I mean, even cheap stock markets can get a lot cheaper when things are, when there's an uncertainty like a war like this.
Hilliard, thank you so much for chatting with us.
Thank you for having me on the show.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodPartners.com. You can find him on Twitter at HMacBE. If you have any questions for Hilliard or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter at HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.